this up. I'm gonna share this with you guys. So shout out to Sloth. He's in this little car right here. Big shout out to him. So as you guys can see, this is pretty much what you will find when you load it up. So this is pretty much my Stoic, the Stoic server's edge, which is of course translates to TSE. So the Stoic server's edge, right? So it should be TSSE, but TSE is a good name, right? It's a real perfect name. So it's pretty much composed of two simple things, right? It's just time and it's of course just a sweep, right? That's it. And then you gotta combine it with a lot of things, right? So you have the time aspect, and of course with the time aspect, you're looking for overall the Fedwire injection time between 9 and 9:30, something I shared to everyone. Preferably should be 9:10 to 9:30, so that 20-minute sequence right there. But I included 9:00 as it's also a real important time. Alright. Now, the second Fedwire injection time is precisely at 15 to 15:30 or 15:10 to 15:30, which is of course the non-macro time, which is of course real nice, right? Why we're supposed to use the non-macro time is just because if you have a high or the high sets in just after the macro is finished, that's the best high, as that high is most likely to get swept. So 9:10 highs and 15:10 highs is most likely to get swept, meaning more likely that the TSA will form. Alright? TSE is actually what it's called. I completely forgot. I said ST or something, but it's actually TSE. Anyways, now pretty much what we're gonna use as the drawn liquidity is the nearest swing low to overall the high, which gets formed at 15 to 15:30 or 9 to 9:30. Alright, and this is UTC plus 2, right, like I've written here. Alright, so we're gonna use the swing low, which overall created the high at those two specific Fedwire injection times. Alright, so here you have pretty much the drawn liquidity, which is of course gonna be a major partial, and you can adjust this to your own standard, right? And what I mean by that is pretty much that you can find you find the place where the stop loss fits best. You find a place where you take partials in of course this model, and you also find a place where of course you can scale out the best. So don't let it be up to me to decide where of course you should scale out or scale in, or you can even scale in, right? But what I mean by scaling is just enter, right? So you can enter pretty much add a turtle soup, like this model precisely is made for you guys to do. But however, you could also just simply enter at the fair value gap of displacements and etc, right? Or do it like a 2022 re-entry model or something. Now of course you have turtle soup or some other entry which I've gone over. So by this I mean pretty much the area that sweeps, right? You enter with an 8 pip stop loss, and the entry needs to be in a macro of the sweep. So you don't enter off of just purely the sweep. You wait for the macro after you have swept that. Alright? Or if you sweep it in a macro, that is your entry. So the pretty much first you should look for like the macro in the sweep. Pretty much. Hopefully everyone understood me. Right? And then things you have to keep in mind, right? So this is pretty much going over pretty much when it does not work. And in these specific conditions, right, pretty much nothing works. So this works on all assets. This works on pretty much gold. It works on Nasdaq. Like on all indices. Works on all commodities. Works on all FX pairs. Works on all exclusive pairs. And you can pretty much trade this on whatever, right? Now the best time frame you can use for this model, of course you could try it on the 50 minutes, however it will be hard due to the macro entry specifically. Yeah, it will be uploaded to YouTube. But the best time frame is the 1 to 5 minute time frame. Me personally, I stick to the 5 minute. However, you can definitely go down to the 1 minute with this. Alright? Definitely. However, your entry needs to be a little better specifically placed, right? if you're in the 1 minute. But me personally, you know, I just stick to the 5 minutes as it's my primary time frame, right? This you can never use in a spooling program, alright? You can never use this in a spooling program. And what the spooling program is, alright, is simply a buying or selling program. And the students know specifically how to spot this in the market. You guys don't really know. However, whenever this model loses, alright, whenever this model loses, it is due to that it's in a buying or selling program, alright? That's literally it. Now you can see the first example, and I'm gonna show, of course, this is pure hindsight, but I'm gonna show you with no hindsight, of course, in the future. So maybe next week I was to call out an TSA happening or TSE happening today. However, we did not get any given TSE appearing on specifically USD or GBP which was the assets I was looking at. However, we got one on Nasdaq, but I'm not primarily trading Nasdaq. And of course, this model more or less will occur, you know, possibly 2 times a day, but in the best scenario possible, right? But it can also pretty much occur pretty much once a day, and that's pretty much how I find this model occurring, right? I think it occurs pretty much once a day on, you know, the assets you're trading. So if you're trading like 3, there is a real big likelihood that you will see either one of those 3 pairs displaying or showing the model. Alright, and I think someone asked about the win rate and RR, right? Of course, this is a fairly new model, right? And I've not collected the data on it. However, someone said it was, I think you guys can correct me if I'm wrong, but some of you guys said it was like, I think it was 70% win rate. Average RR was like 1 to 3. So it's not really that bad. And it's a real mechanical trading edge, which I wanted to show you. So this primarily goes to show how easy it is to create a mechanical trading edge, which of course is purely mechanical, as this is purely mechanical, right? There is no intuition parts in this model. Alright, maybe with bias, right? But other than that, of course, this is the most simplistic, easiest thing you can trade, and you can be real profitable with it. Alright, I definitely show you, due to I have the stats that the highs and lows get formed at those particular times. You can definitely be profitable with this simple little market edge. And of course, not everyone will be profitable with this, as you gotta find your edge which fits your personality. However, I wanted to share something for free. Of course, this will never stop working. It will work forever and ever, alright? Or maybe not ever and ever, right? But it will work for the prolonged period of, prolonged period of time, right? As I've covered, works on all assets, and it is fractal. It have worked for a long time, right? So all of these things, right? As I've used the timings, I've already used the concept, but I've not used the model, because I just simply trade a STA, and not the TSE. But you can see pretty much here's the model. This is how it looks, real clean, right? So you pretty much have the timings. I'll just do this. Oh man, what's this doing? Yeah, it's just loaded this up again. That's crazy. But you can see the time frame right here. And of course, this is on the 5-minute time frame on actually GBP USD, which is an asset I don't trade. And of course, this works on USD, GBP USD, on every single asset like previously mentioned. And I'm going to show you guys this. But of course, it will be hindsight, right? Because I've now pretty much used this model. But next week it will be no hindsight, so I'll show you on Twitter and I'll show you pretty much here in the server. But as you guys can see, we're just watching overall and high or low getting formed at a specific time. Of course, given the John liquidity as well and bias. So of course, in this instance, we were bullish. So you saw a low overall, meaning you would look for a low getting formed between 9 and 9:30. You saw a low get us settled in right there. And now overall, what you saw was overall total soup. Now let's go into more extensive, and this is pretty much the model. This is how it's going to look on your chart. Now you can pretty much see that this was a non-macro entry. As you guys can see, it's 11:25 right here. It was the right time, as this was overall created in the right time, right this low. We got a total soup of that, and this was the nearest macro, meaning you would enter right there, 8 pip stop loss, target the non-macro high, and of course this is the swing high getting created by the swing low. See, look at this, guys, look at this. So this is what I mean pretty much with the John liquidity which you're gonna use. definitely scale out most of your position right here. All right, 70% is decent, man. You guys don't know, like 40%, it's crazy. All right, you gotta scale out most of your positions in here. All right, that's it. Now another example. This is pretty much the same day, so like wow, crazy, right? So you saw 15, 15, 30 right here, high, right? And of course, this was non-biased. We were bullish. However, this was a bearish one we saw. And of course, you don't really need a bias. The only thing you need is the simple John liquidity. Now, of course, this was the swing high, so we had a swing low. This was a non-macro low, meaning it's engineered liquidity. Market needs to take that out. We did just a simple total soup. Entry should be in a macro after the sweep or in the sweep. So you can see your macro entry right there. 8 pip stop loss, target in this 16.15 non-macro low. Bam, simple 1 2 3. Now another example here on Nasdaq, and I'll show you today's example as well. There's actually an indicator now for this as well. So I'll explain it later. So pretty much as you see here, 15, 15, 30, 15, 30 high right here. What we saw was pretty much just a simple total soup of that, and now this is pretty much more extensive. You saw the swing low. Overall, this was a macro low, but it's still valid, right? As is the swing low getting created by the swing high at 15, 15, 30, where we're looking for low prices. Macro right here, drawn liquidity, meaning here's your partial. You can, of course, continue having, you know, don't scale out fully here. All right, you can potentially, right? You don't really need to scale out fully in here. You can wait for some other thing, right? Because you can reprogram this. You can pretty much change a lot of stuff, make it even better. But this is the most simple stuff, right? It should be like a simple scalping model. You can see macro entry right here, targeting this low. Now I will go in and show this on the charts, right? So I'm just gonna go back, random date, and show you this reoccurring thing happening pretty much every single more or less every single day, right? But we're gonna start off with whatever you guys want, like, so we can start off with Nasdaq, for example, and we're gonna go through it. So let's just scroll a little bit back, and this is some asset I don't really use, and I don't really have bias on it, so let's just test it out so you guys can see it in action, right? So the first thing you're gonna do is, of course, look for, now we just, I'm gonna cover all of the weeks, all of the days, and you guys, you have to collect your own data. You have to follow your own system. As I'm going to forward test this, and of course, forward testing is always going to be much better than back testing. And of course, this is not. Yeah, and I don't know. EURUSD. I have it in my head, right? So I don't really want to do EURUSD specifically, as I really I know every single candidate printed more or less on EURUSD, but we can try it on GBP USD or AUD USD or US 500 or something like that, or US 30 or something like that. We'll see. But of course, this when testing it on indices, you get much more volatility at a later date, meaning you pretty much, it's better for you to use it at the law, how do you say it? Pretty much the other Fed injection time, so the 15 to 1530, right, with a 1520 low. That's better, as you get much more volatility occurring at a later date when New York opens, right? So it's simple. So overall, we will look for an high right here or something, a simple high or low, primary high low. Did we get one here? No, we did not pretty much get one. We got with this, right? But 1530, 1520, did we get some special shit? No, nothing really. Now let's go to 1530. 1530 here. Sorry, this is gonna be like the whole thing, right? So 1530. No, they did not really get anything. Like, you could possibly do something with here, right? And I think this is even in a macro. No, it was not really in a macro sweep. Where would you enter? You would enter like 1610. So here you have, oh, it was actually in a macro, right? So 1600, as you have 1550, 1600, and you're gonna correct me after this, by the way. So you would pretty much target this high, which of course works, but this is not like a primary low, right? I would much rather have a bigger low, right? This is just some small. You can see it was created at 1520, right? So real nice, real nice. Total soup, higher prices, right? And maybe you guys want me to do something like this. Wait, let me just fix this so you guys can see it much better. So let's actually, go in and do this. So you guys can see here, low, total soup right here. Yeah, I don't really have total soup. Uh, total soup, macro entry. When did macro start? 15. Yeah, here was the first. So here would be your entry at this candle right here. Entry. Bam. You could maybe have a stop loss right here, and then pretty much target this, as that's pretty much the swing high getting created by the swing low. So something like this. This is pretty much the first simple stuff, right? Simple, real simple stuff. You can see perfect delivery to the upside. Now just continue to the next day, and of course this is not using bias. So actually maybe you could even take this, right? This low, but I guess we're bullish. We're always bullish, so I'm always gonna look for bullish examples on Nasdaq. So I'm not gonna look for any bearish examples, just bullish, bullish ones. So 930, 930, 920 low, 915 low. Simple stuff, right? So pretty much always you'll see in low or high getting settled in at the middle of it, right? So we would look for a sweep of this. We saw pretty much a sweep of here, but this was pretty much 15, 15, 30, 15, 15, 30. No, nothing here. So yeah, you could definitely use this. So here, which was the swing high getting created here. Total soup, which was the swing high getting created here. Pretty much you have this, right? So this would be your target, right? And of course, like we have 8 percentages, something maybe at the low here. Something like you would maybe wait for the macro. Wait, let me just check when the macro starts here. Here 50, 50, which was the first macro, I guess, after the sweep. So 50 activation right here. You would potentially, put your stop loss at the low created by the macro, right? So wait a little bit for displacement and such, and then swing high would be your target. So this is of course simple stuff. So second man, that's crazy having 20 RR. I simple 1 to 5 I think as my, yeah, it's definitely my average. So you can see here two examples right here. Simple macro entry. Hopefully, did everybody understand this, by the way? Did I explain it good? Yes or no? Please tell me. Yes, yes. All right, that's perfect. That's perfect. Just tell me if I'm not explaining it good. All right, gonna try my best. All right. Too easy, bro. All right, perfect, bro. Perfect. That's how this model should be. It's a simple Fed wire injection times, right? Now 930. We had a high, right? But we're looking for a low, as we're gonna be bullish, right? We're just gonna look for bullish scenarios happening. So like I wrote, either you'll find, that given Fed wire injection time being the low or the high of the day, or you'll see a total soup, right, which is the most probable. Now, this of course won't have 100% win rate, but it will as well. It will pretty much be profitable, as I've used this, as my buys. And that's pretty much how I get, low highs of the days, like simple stuff. So we have one here. Like we could look for the 9, right? I think both works in this given day, right? And you can see here's an example of a spooling day. So a spooling day is pretty much when we have one continuous day in one single direction. Now the students know how to anticipate every single program you can have in the market, or IPTA programs, but this is a day where you should not take a trade using that given model. All right, so this is a day which overall the model you'll tend to see does not work, right? So that's the only exception, but of course you'll see all other models failing except for like market maker models, or of course graded price buy sell programs, or IPTA programs, right? But then of course you have this. So 9 930. Let's check. I'm guessing maybe both worked out here. Of course, this is fully hindsight, you could say. Even though I don't really know anything about Nasdaq, I don't really trade it so much. This is still, going back in price, looking for pretty much when the model worked, when the model failed, etc., etc. So of course here would be your target, and this is actually a macro high still. Like, and you should maybe take away the macro high. So maybe if the swing high is in a macro, you should maybe take it away, because then it's not engineer liquidity. You can mix a little bit of things here, and try to perfect it, right? But I think pretty much total soup. I guess even though it was real choppy, let's see. So we had this 910, right? 910 to 920, real good low. And then we have the macro. When is the macro started? 9850. This was non-sweep. Now we're waiting for macro. So here would pretty much be your entry, like maybe here at 1005. But of course you would wait a little bit for displacement to the upside. So maybe enter somewhat like here. Put loss, stop loss are here. Take something like this, right? Something like this. Simple stuff. Even though this was a macro high. Now of course we have, I think, 1530 or something. 1530. We maybe have a high here. You can see the 1530 high here, high right there. 1530 high, turtle soup lower, right? And you would be targeting this. How would that would be failing? But you could still take massive partials in here, etc., etc. Did we have anything else? 1530 low. No low in here, meaning pretty much no model in this. I guess this was news as well, so that's pretty much good, right? You can check me if I'm wrong here. Did we have any 15, 15, 30? Nothing real special, right? Nothing real special. Like maybe some of this low, but you definitely get stopped out in here. Let's say you were gonna take one of these. 50, 15, 30. So that maybe this would be a loss for you. Something like this, and here would be your target. So this would definitely be a fail. Let's go and check the other days. So 9. Where is 9? 9. Right there. 930. And of course, try to, maybe even if this worked out, in this given day, if you had your stop loss maybe below this low, even though, right, try to, disregard when the low is not a big low, meaning when it's not an immediate low and it's a short-term low. All right, so try to take away short-term lows and focus on intermediate lows or long-term lows, right? As you never know if it's gonna get become the daily low, right? I came up with this model. This specific model I came up with. Someone else came up with it, right? It was not me. It was actually one of the people here in this server. But I showed you guys some special Fed wire injection times. You guys said, "Oh, this will have a real good win rate and such." So someone just created it, I guess. So nothing really here. This is also another spooling program, but this was maybe FOMC or such, or CPI or anything like that. The win, like, you can never say the win ratio will be a certain thing, right? If you think about it logically, because it will be something else for you guys compared to what it is for me, and of course for you guys it will be something else compared to one other person, right? So pretty much every single little ratio will be different for each and every one of you guys. 15, 15, 30, 50, 30. Easy here. Respected, right? This became a long-term low, so this is something you would look for, right? So nothing real here. Right. Yeah, right. Nothing really here. As we don't look for, I don't really go through shorts here on Nasdaq. Nothing really there. Oh, this is an in-market bank range. Wow, some sauce. This is crazy. showing you guys this. This is this is crazy. My annotations, my long, this is my test, so this is something I use, only for when trading actually. I would say do 1,000 data sets on this model. 1,000. So look for 1,000 plus of these trades if you're gonna backtest. If you're gonna forward test, I guess there's enough with 200. But backtesting, go through 1,000 plus trades. All right. If you're gonna trade it with live capital, right? And you need to trust the model, right? You can't only. Now this is a good low. This is a real fantastic low. This is a prime example of what I want to show you, or what I wanted to show you. As this is a, you see this manipulation lower. This is specific, and it becomes pretty much an intermediate low, as it's the low of the swing to swing high. All right, but so this is a good thing. I collect data. I don't journal. I don't backtest, right? I don't do any of that. I just collect data on the trades I take with live capital. Alright, that's it. So total soup right there, you had 930 right here. I have the low right here, which is an in choppy conditions. It is an intermediate low. Swept that. When was the macro? Here would be your entry, I guess. Yeah, macro. Here would be your entry right there. Stop loss under this low, right? Targeting this swing high. So that would be simple 1 to 2 RR. So you've seen pretty much one loss, like so far. But I'm just gonna play something like this. So you can see it has no big high RR, but nothing crazy. But it's still, real good if you want to scalp. And then 15, 15, 30. I guess here is also good. 15, 15, 30. So 15, 15, 30 low, right there. 15, 30 low. Total soup. I guess this was also gonna be an total soup. I will be targeting this, but that would fail this time, right? So 50, 50, 30 low. Sweep. What was the sweep? Yeah, right here. So it would precisely enter like when it swept it. So right there had a determined amount of, stop loss in amount of pips, right? And then you would pretty much target here. So here this model would fail. This right here would fail. So second loss, right? This is the second loss of this, more or less going through the trade, right? So in this case, it would actually fail, and then of course it would come up all the way right there. And I think now we're starting to see some lower prices. But let's see how the bullish shit worked out. 930 low. Yeah, this worked. This right here, simple. When we swept it, right? 930 total soup, higher, swept this, of course. So that in that case it worked out. And now let's continue. Shall we focus more on the 15, 15, 30? I guess I've shown you some 930. So let's just show you some more volatile shit. So 15, 15, 30 right here. I think 15, 30 low. Total soup. I guess in this case it also failed. So third overall loss here. And I guess how many wins? I don't know. But some wins as well. So this would be, what's the macro? 50 right here. 50 right here. So maybe something like this. Targeting this, of course, swing high, which was created at 25. So this would be a perfect trade. Even though it failed, would be still real perfect trade. Real perfect. All right. I would be afraid Asia low. Yeah, definitely, bro. Definitely. Like, this is something you have to take in consideration. But now I'm just purely testing, the what is it called? The simple mechanical trading edge, right? So now I'm just, testing it, and it looks real good. Right? Just without the things, right? So maybe if you were bearish, you would take the short here instead. So you would take pretty much the low, targeting this low, which overall, worked out, as you can see. So targeting this low. So of course you had an, bearish example here as well. But I showed you the bullish, now incorporating the buys, as I'm pretty much always going to be bullish on Nasdaq. This worked out in one singular direction, other direction it failed. but up to you, right? So you gotta, you know, incorporate the bias and such. I'm just focusing on the bullish examples. Let's take the 15 low right here, 1530 right here, 1545, 1550. Here would be your entry. Swept that, total soup. As you can see, this is pretty much an intermediate low. So total soup right here. Entry, stop loss, targeting the swing high. So this would be your model right here. This right here, something like this. Right? Of course, look at the potential. Look at the potential. All right. So you maybe could incorporate like a market maker model. So maybe something like this. All right. However, I'm gonna have it like this, as that's the model. Right? That's the only thing I've shown you guys. It's up to you. All right, Bananan. It's up to you. All right. You gotta overall, you know, change that whenever you want. All right. It's up to you. All right. So maybe after taking one partial, right? Maybe you don't take partials using the trade. You gotta find. Now I've just shown you the model. You gotta overall, you know, create the inner, you know, the inner shit of your model. You gotta pretty much, you know, perfect the entry. You gotta perfect every single thing. All right. But I've shown you the framework. Now you gotta perfect it. Right. And you can see how you know lower prices we saw here. And this is, you know, maybe it worked out here. Like let's check 930. Do sweep here. Yeah, swept. Of course, you saw some lower prices after that. But you would overall, you know, be out right there. One more. 15, 15, 30. Let's check if it actually worked in a spooling program. I would be surprised if it did. No, 1530 just created a long-term high, and then of course it just traded lower. And this is another example of a spooling program, so here it would not work, right? You would never try to trade this in a spooling program. Then you're never gonna be profitable with this trading edge. One more. Let's check it here. 15, 1530. Right here. This maybe don't like. I don't know if this would be a model or not. Like I would say not, but it would be a win either way. But yeah, you gotta perfect that shit. Now you saw market maker model right here, another market maker model. 15, 1530. Right here, low. I think. Yeah, low right here. Even though it's not. This is, you know, another primary example of an and not too good, you know, TSE, as this is no primary low. This is no intermediate low or long term low. We'll just see a sweep of that, even though it worked out. Would not be anything. Let's go and check GBP. All right, let's go and check GBP, guys. Shall we? Yes or no? You guys tell me. Now I've checked Nasdaq. It's something I've never, you know, pretty much traded. Now let's just take that away. What do you guys think? Yes or no? Yes. All right, let's go and do it. Can you explain what total soup is? So it's pretty much buying the sell side liquidity. You're buying when market takes out sell side liquidity. So let's just go back, and now you'll see some perfection. All right. Of course, I love foreign exchange, so you will see some massive perfection in here. All right, this model is killing it. Of course, on Nasdaq too. I'm not really good at Nasdaq, but here you can pretty much let the beauty speak, because now I have some idea of the bias and such. So this is hindsight, right? That's you know, I love USD, so it's pretty much translating to USD. So I'm just gonna translate, you know. But this is pure hindsight, right? So I'm knowing the bias here and such. Hindsight moves. 930. No real thing. You could probably say this, but I would not say this, as this is a real, you know, short-term low. When you never look at the short-term low. Now let's go to 15, 1530. 15, 1530. And now let's just also put down this. That would be much better. Alright, let's actually put down this. So let's check when it loads up. Come on, load up. Now it should be in, right? Isn't it? Yeah. Why is it not? You know, doing it anything here. All right, let's start here. Let's start here. That's crazy. It should do all of them, I guess. Should have done. Yeah, but let's start when it starts. I'll just show you these examples and I'm gonna be done. I'm gonna go to bed. But look at this. It's gonna kill it. It's gonna kill it here in both directions, alright? So look at this. Open your eyes now, alright? Because now come FX, alright? I love FX. But you can see here. Perfect, perfect. You can see 9:30, right? You can see pretty much total soup being right here. Macro right here. Next macro would be 50, so you would enter pretty much here, right? So your entry would be here. Total soup, right? As you see, you could enter on the total soup, but I would enter on the macro as the model says it. 9 pips. Let's check. Here's 9 pips. Bam. Look at the perfection. It's gonna be perfect now, guys. And this is pretty much gonna be your model right here. Of course, you could target this. You could target this. So look at the potential. Look at the potential here. All right. Next, of course, this ended up being just. Look at the precision here, where we actually have 1510, which is of course the real shit. Where the real shit starts is the real good shit. All right. And you can see pretty much here, same thing in here, where we actually swept this low, total soup, target this, bam. So you could have, you know, ping pong this market shit. So you can see here, entry at the 50 macro, you know, bam. So look at this shit. Look at the simple stuff. Look at the simples. Look at the ping pong in here. All right. And then of course you have this right here. Another primary example of this. Yeah, it can ping pong. All right, it can ping pong this model. You have this 9:30, the low right here, swept, just a simple total soup. Oh my gosh, look at this beauty. Look at this beauty, guys. Look at this beauty. So when would you enter? Alright, such a simple stuff. Alright, how can this simple stuff be so damn good? 50, we had this was the sweep, so you would enter here. 9 pip stop loss, target and high, right? But of course you can see the upside potential. You can pretty much target this, like that's also a possibility, as this tends to be low. So like look like, but I don't want to, you know, I don't want to say anything, right? I don't want to overextend this. But you know, this could have been your John liquidity, right? But I'm not gonna be that guy. I'm gonna be this guy. Simple 1 to 2, right? So let's be boring here. Nothing crazy, because you would be bullish here, right? Here was the example I showed you guys. So bam, look at this and then look at the downside. So look, first here, right? First here, with this sweep, right here, sweep, entry, exit, entry. When we swept those rating wise, entry at 50, right here, 50, stop loss, right? Targeting this, bam. So bam, bam. All right, how many RRs is that? That's like, I don't know, but it's like 20 or something. And here's just another spooling program. Here's pretty much when it won't work. Another real good, real nice little example. Or actually no, we had, what was it here? So here's another example when pretty much it won't work. We have 15, you see here. I swept that in this, and I just another side note, right, for the people, you know, making it so far in the call, etc, etc. This won't work, all right. This won't work in spooling programs. Number one, right? I've pretty much told it, but it won't work if you sweep it in another Fed wire injection time. All right, so it's not valid if you sweep, if the sweep is of the previous Fed wire injection time on another Fed wire injection time. Alright? That's for for the people in here. Right, another spooling program, and I guess this was FOMC or such. Yeah, it was FOMC. But you can see here, like yeah, it did not quite work. Quite not work, right? You can see like, not because it failed, right? Because the model did not play out. Let's check it here. Like here's another example of, you know, when we sweep it in that given time, right? So you can see we swept it here. That's why pretty much it won't work, like I told you guys. But you could maybe use, you know, potentially these reticulos or something. and you look for this 15, 1530 sweep. So you can see worked out right here, more or less. Like you can we probably reach this. Yeah, you probably reach this and this. So like now you understand the model. All right, do you understand the model? Yes or no? Please just tell me. I'm done, right? I'm done, right? This is it. This is the model.